Good morning, everybody. It's the 29th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour and I'm joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right.
Yeah, not bad. A few fun and games for us this morning on the technical front.
Yeah, still trying to work on a few issues.
Oh,
Bit of a headache.
certainly is. Not the way we intended on starting the week, but
Mm,
that's just the way it goes sometimes, I guess.
yeah, hopefully we'll have it all back up and running soon.
Yeah, at least we're not in charge of a huge vessel in the Suez Canal, I guess.
No, if it does feel a bit like that, but
Yeah.
yeah, I don't think the impact on the economy is as bad as that. But
No, not
you
at the
never know.
moment. Well, you
No.
don't. Um, Maybe we could be the catalyst for a big old market sell-off today because we couldn't get things up and running. We'll have to wait and see.
Yeah, it could be.
Okay, so onto the news then. After a week of the Ever Given ship being wedged across the Suez Canal, it looks like they may have refloated it partially this morning. Crude oil has fallen on the back of that news. No immediate clarity on the crucial question as to whether or not the traffic will restart, but looks like we might be getting somewhere with that. As we know, the canal is responsible for about 12% of world trade, and in recent days, ships have had to go around Africa in order to get to Asia rather than passing through the canal itself. So hopefully that will get sorted at some point over the next couple of days. Some interesting news that global traders are bracing themselves for what's shaping up to be one of the most anticipated opens in US equities for months, following an extraordinary 20 billion wave of block trades on Friday that rattled investors. Did you see this news, Steve?
No, I didn't. No.
There's a mystery seller which well, there
Oh,
was a
I did
mystery
see
seller
something
which has
about a
seen
mystery
it's
seller.
a family office of former Tiger management trader Bill Huang at the center of a margin call from large banks, including Goldman Sachs. So the Japanese bank Nomura is said to be facing significant potential losses from the unnamed US client, and that sent its shares down 16%.
Wow.
So yeah, something brewing there for sure. On the retail front, we've seen H&M stores in some parts of China being closed. There's seems to be a bit going on with clothing giants across the globe. We've had Nike as well and Uniqlo all becoming broiled in a situation over human rights in China.
Yeah.
And there's a bit of a quarrel going on there, so that's not particularly good. So a few things in the news at the moment that could be quite hurtful to markets, it would seem. I guess we can jump straight into the charts. What are you seeing on the equity front? I mean, I've got the actually. Should we start off with FX? I've got it on the
Yeah.
screen here.
Crack on with FX, and I'll tell
Okay,
you what.
so first up, looking at the basket, so we've got a very flat open for dollar index today, which typically is something that drives all markets. But as you can see, not really much going on from the open today. That's the one that's protruding there. If we look elsewhere, we did see a little bit of a dip back in the US dollar on Friday, and everything else sort of ticking higher, as you can see. But if we drill down into the individual situation with dollar index, then it still looks pretty bullish. We've broken out above this 92.50 level. Bit of stalling at the moment, but still looks good to continue higher up to 94 for me in the short term. If we look at euro dollar, the situation pretty flat there as well. Bit of a bounce back on Friday, but while below this resistance here at 118.35, I think we can see lower prices down to 116.95 in the fairly short term. Potentially a bigger top formation taking shape here. So this is the daily chart. So what I'm thinking maybe is what we've got is a left shoulder ahead, maybe a right shoulder forming down to here, something like that. Highly speculative at this stage, but what we are seeing is some sort of rounding formation taking shape following the break of this channel here. So not looking particularly bullish for euro dollar at the moment for me. If we look elsewhere, quite interested in this one. Aussie yen, we've seen a break of this channel. We are in the process of retesting the underside of this at the moment. Yes, we saw a very bullish candle form on Friday, but the volumes have subsided on this bounce back. So waiting to see what happens there. I'd be maybe looking at selling into rallies, providing this high isn't broken. Then I think there is the case for maybe a short-term top forming on that. If we look at Aussie dollar, talked about this a while back, head and shoulders formation potentially broken here on this candle on the 23rd of March, looking at a retest of the neckline at the moment. Maybe limited upside there, I think, on Aussie US dollar. I'd be looking to sell maybe into 77.00 on that one, targeting a move down to 72.35, which is the measured move of this head and shoulders formation. So still favouring obviously strength in US dollar over pretty much all the other currencies. If we look at cable, we saw an interesting move here. We saw a break of this channel. Again, it's another one we're looking for a retest of the underside to see how it reacts. Potentially a top formation here as well, and looking for lower prices. Firstly down to this 38.2 at 136.43, then maybe down to the 50% level at 134.58. If we look at some of the other US dollar pairs, this one's quite interesting as well. We've got dollar CAD, very large wedge pattern has formed on the daily chart, and we are testing that at the moment, which is coming in at 126.29. If we get a break there, then that could lead to a fairly decent correction higher. The first port of call from a fib perspective is the 38.2 level, which is at 132.44. So that'll be quite a substantial move to the upside, actually, talking about nearly 5%, which will be quite interesting on that. And if we look at dollar Swiss, broken out of a bit of a flag pattern last week and looks as though we are continuing higher. We've stalled a little bit, maybe a touch of consolidation there, but looking good to head up to sort of 95.00 on that one in the fairly short term. And finally, if we look at dollar yen, well, we've been talking about this downtrend line, which has capped price for a number of months, years actually, going back to 2015. So very interesting level there that's just been taken out. And if we can get above this high here that we posted back in June 2020, then I think it looks like we're set for a continuation higher on that one. So yeah, all looks pretty good for a continuation from the dollar, I think, in the short term. So sticking with that play for now. Pretty much rounds up my thoughts and views on FX. As we mentioned, there's some interesting stories happening on the equity side of things. So Steve, I'll throw it over to you and you can give us a rundown on what you think.
Okay, mate. Yeah, as usual, I'd like to sort of look at the longer term charts on a Monday, just to sort of give us a bit of a view.
I don't think it might be showing the wrong screen.
Hold on.
There we go. Yeah, lovely.
Yeah, so why is that Bitcoin? I don't know. I honestly don't trade Bitcoin. Don't get sucked into that thinking I'm doing it sneakily. Yeah, looking at the weekly chart on Footsie, we've we stalled around this 68.10 level on a number of occasions and rejected, and we've sort of posted these hanging man candles. So for me, it does feel a little bit overstretched and tired on the around these levels, around the 6,700 to 6,800. Momentum, as you can see on this MACD, is failing and moving lower. So I think it's only really the dollar story that's keeping this elevated on the Footsie side of things. At the moment, it is a case of just buying dips and selling into this 68.10 level. So I think that continues. The weekly chart on the DAX is an expanding wedge, which is a very difficult chart, and it's a very long-term chart. If you can see, we're going right the way back to potentially a level of around about 15,000 on the DAX, acting as some sort of big psychological potential reversal level. So I still think there's a little bit more upside to the indices at the moment, but obviously, as Joe was saying, there's a lot of stories flying around that tells us that maybe we're coming to the end of this rally. But until I see a clear reversal signal, a clear reversal pattern formation, I'm not convinced by it. On the CAC, we're heading up to the all-time highs from February last year, just before the pandemic hit. We've failed just below it, and we're holding around just under the all-time high levels, trading around 6,000 at the moment, and 6,123 is where we've got to go to sort of like retest them highs. On the US side of things, again, we're hanging around the all-time highs. Doesn't feel like it's slowing down. On the tech side of things, it's really indecisive. We're seeing this spikes in both directions, great signs of indecision, but still a negative tinge to the tech sector. S&P's is really trying to get to this 4,000 level. We've been talking about this 4,000, or I've been boring everyone about this 4,000 level for a long time now. And I still feel we have to see that 4000 number come up on the S&Ps before we do reverse lower. A hanging man candle posted last week, little bit ominous, but as we say, maybe all these, the Suez Canal blockage, and once that clears up, maybe then we'll get a better idea of where the sort of the economic impact is on that. Over to commodities. On the oil, we have got a top formation in place. Yet last week we saw a move down to 57.25 on the WTI crude oil, but we rallied back strongly into the Friday's close, and we've started with a negative slant this morning. We can see at MACD crossing over here, so momentum is stalling. So I think for the moment, oil prices are impacted. The ships don't need oil if they're just sitting there floating. So maybe that's impacting on that as well. Gold for me is capped around about 17.55 at the moment. Again, a hanging man candle posted on last week's chart and a negative start this morning, trading around 17.26. We seem to be in a range between 17.20 or 17.19, actually, the exact level, and 17.45, with 17.55 the spike high. And I think really it feels, again, there's still a little bit of negativity there. And if we do get any sort of stock rally sort of again this week, I think this could gold could come under pressure again, especially with the dollar rallying. The dollar's holding up around this, just close to this 93 level. Feels like we're going to push above it, and so I think that will have a negative impact on gold, and we'll see lower prices in gold. So looking at really selling around that 17.45 level with a stop above. Short term intraday, maybe buying around about 17.20 to 17.25, but a tight stop below that. And if it does break the 17.19 level, I think we have to go with the flow on the downside, looking towards that 16.85 and 16.70, 16.60 level. That pretty much covers it on that, Joe, on the
Cool.
indices. The copper is just sideways again. We had this fantastic rally in the copper, and it seems to be just doji indecision around these higher levels. The spike high around 437 failed miserably, and we're getting these hanging man candles. So plenty of room for a correction lower without impacting the trend higher.
Yeah,
so,
I mean, I was looking at some
of
of the miners; they look pretty good in London. So
yeah.
no signs of that slowing down at the moment, or maybe a bit of crossover on the MACD coming, maybe.
Yeah, I think there is potential for a pullback, but it won't be a change. It doesn't feel like it's going to be a change of trend, just a normal
Stay above
correction
the
that we see
zero
in
line, and
markets.
we'll be all right, won't we?
Exactly. What, $0?
Yeah.
Yeah, I hope that doesn't go inverted like the yields have done. So
Exactly.
yeah,
Cool.
that's about it.
Perfect. Okay, well, let's move on to the gun to the head stuff from last week, and we won't spend too much time on it because we got stopped out on two trades. We had Aussie Yen and DAX, both of which were stopped out for 1 hour losses. And Steve, we're on a bit of a stinky streak at the moment, 10 losers in a row, so we need to correct course today. And much like the ship in the Suez Canal, we're going to change our direction and go back to open the floodgates of winners, let's hope. Have you got anything that you fancy today, or do you want me to go first?
No, I don't mind going first.
Well, I've got one on the screen here.
Go on. Yeah,
I'm going to go for dollar yen, because I talked about that daily chart and how critical that break of the long-term uptrend has been, or has the potential to be. So I'm fancying a move to new highs today. It's already looking reasonably good at the moment. So it's trading at 109.66. Going to place a stop loss below the low that we posted at 6 o'clock this morning at 109.36. The target's going to have to be a bit speculative just in order to make the risk reward quite good from here. So I'm going to go at 110.30, which, we've got a lot of fresh air up here because the price hasn't been this high for quite some time. So looking for a continuation higher there. Risk reward 2-1 on that.
2-1.
Not.
We
I
are
know
struggling,
usually
aren't
like,
we?
yeah, I usually like better than that, but that's what I'm going with today. What you got?
Um, well, let's stick with the Footsie then. I'm because the dollar's still looking quite tasty. I'm going to buy Footsie. Trading at 67.20 now. So let's get long here. We're above the Ichimoku cloud. It's broken up to the upside. Posted a buy level around 67.05. Had a spike high up to 67.80. That was obviously on Friday, and we're coming lower, but I think there's opportunity down here. Stop at 66.85. So we've got a 35 tick stop, and we'll target 68.25. Oh, we can't really do 68.25 after I've been talking about 68.10 level, can we? Let's just go for a 2-1 risk reward.
Oh God,
is that bad? Is that too sensible?
Listen, any winner will do. Any winner
60,
will do.
Well, 67.90. That's 20 ticks inside the 68.10 level. So yeah, pushing higher in Footsie today. Let's come on, Footsie. Didn't feel convincing, did it? Have you left me, Joe?
No, I'm still here. Just
all right.
whoa, look at
that. What?
Inception.
So yeah, getting long at 67.20. Stop at 66.85. Targeting 67.90. 2-1. That's all you're getting out of me.
Yeah, 2-1 on 2-1 ideas from us today. Then there's no real news due out today. The only thing I have seen which may impact things is Joe Biden pushing for another stimulus package. This time focusing on infrastructure spend. Obviously, that will potentially impact equities and the inflation number that we've seen. And I guess all eyes on the US Open to see what happens with this big old block margin call position that's floating around in the market and what impact that will have. So, yeah, there are a few bits and pieces that are of interest today. And I think we can wrap it up there, Steve, if you're all right with that.
Yeah,
cool.
Absolutely.
Great. All right. Well, have a great day, everybody. And let's hope this week is a good one.
Yeah. Cheers, everyone.
See you later. Bye.